I want to bring in Brian Barish. He runs the Cambiar Opportunity Fund, which beat 94% of its peers last year. But this is a different world now, right? Brian's been trying to find a way to take advantage of what has been battered so far. A brave soul. If you are trying to do that. Brian, before we get to that, though, I mean, we were just talking with Manis about what is going on in Europe. Does Europe hold the key to a rally here?
In the very short term, yes. I think Europe needs to stabilize. If Europe stabilizes, the market's under so much pressure, Betty. I read yesterday that the losses in the last 3 weeks are the third most rapid in modern financial history. Only the 87 crash in 2008 were worse.
Well, you actually think we're going through an 87 crash, only we might be doing this in a series of days,
yeah,
though,
well,
right?
87 crash was a panic that turned out to be an uninformed panic. There was nothing really very wrong with the world. There was a bit of a valuation problem, that was it. We didn't have a valuation problem, in my opinion, but we do have a panic now. And 2008, on the other hand, that was a well-informed panic. Things got a whole lot worse. So we'll see.
But isn't there some credibility to this, though? I mean, there is some serious concerns about a default in Greece and other countries.
There is. You know, I think the big difference is in the case of 2008, you had banks sitting on hundreds of billions of dollars of garbage loans, essentially. The problem now in France and Italy, to some extent, is banks are sitting on bonds of their own governments. So they haven't invested in some crazy CDOs or other, weird products. This is the most vanilla stuff you can imagine.
That's a good point. Then, in that case, is that why you are, in a way, looking for some advantages, some opportunities here?
This is a fixable problem.
Okay.
This is about the credibility of governments. Now, admittedly, whether it was the U.S.'s default ceiling issues or other issues in the Eurozone, Western governments don't look very credible right now. And I think that's at the core of what's become a massive confidence problem overnight.
So is that different than what you did in '08?
Well, '08, we saw just a fissure in the overall financial system. Banks did not have enough capital to support their activities. Bank capital in the United States is pretty good. And obviously, if we went into some
good, but there's always that but.
If we went into some kind of cataclysmic recession, then it's not so good. They're very economically sensitive, and I think that's where the fear lies.
Okay, so the advantages that you're taking, I'm told that you're adding on to some of your positions, right? Into Sprint and also into Vodafone, is that right?
Yeah, I think you can go after a few names here that have just been sold indiscriminately. So in terms of the telephone companies, I'm not too worried about the variability of phone usage in a recession. Sprint's a restructuring story that have a lot of levers that they can pull independently of what the economy does. Vodafone's very interesting. That's about a 7% yield now and a 10% yield because they're going to start receiving dividends from Verizon Wireless beginning next year. So a 10% yield when Treasury bonds are yielding basically zero, that seems like a pretty good bet.
It's a good payout then. One of your stocks, one of your holdings got hit by the S&P downgrade, MetLife, right?
Yeah, we don't own a lot of financials. We have owned some of the life insurers. And I think the issue there is it's a financial and it got clipped just like everything else. I believe it trades at about 68% of book value as of yesterday, which is very, very inexpensive.
But that could be said of a lot of your stocks right now, though, right? A lot of your holdings right now.
Yeah, I did a survey on Sunday night before the market opened on Monday. Out of 39 stocks in our portfolio, 31 of them were trading at 20 to 30-year troughs in terms of long-term valuations. And we went through this same exercise in late 2008, and it was very predictive of where stocks would likely find a bottom. Now, if you get into a total panic, which we got into in obviously in the March-February timeframe of 2009, then no level is safe. But outside of that, those valuations tended to hold, and I'm reasonably confident, reasonably as we sit here, Betty, that valuations will hold this time around as well.
Okay, all right, Brian, thank you. Really appreciate it. Brian Barish of Cambiar Investments.